picture this for a second. You've poured 30 years, maybe even 40 years of your life into building a business from the ground up. Imagine the sheer effort. Decades of sacrifice, of passing on vacations, of reinvesting every spare dollar back into the company. Decades of smart risks, the kind that kept you awake at night, staring at the ceiling, wondering if you'd made a catastrophic mistake. And of course, countless sleepless nights spent worrying about payroll, about competitors, about the future. But you did it. It all paid off. Your net worth is now well into the 7, perhaps 8 or even 9 figures. You've created something that will not only provide for your family, but for your employees' families. All of that proof of your life's work, the tangible result of all that sacrifice, is sitting in a domestic bank account. It's a number on a screen that represents your freedom, your security, and your legacy. It seems safe, it feels secure. You're in your home country using a well-known bank. What could possibly go wrong? Then, one ordinary Tuesday afternoon, the phone rings. You don't recognize the number, but you answer it. It's your lawyer, and his voice has a tone you've never heard before, a tone of urgent seriousness. A disgruntled ex-employee, someone you had to let go for poor performance 6 months ago, has decided their misfortune is your fault. Or maybe it's a bitter competitor, someone who could never beat you in the marketplace and has decided to try beating you in the courtroom. They've hit you with a frivolous but catastrophically expensive lawsuit. It's a claim full of wild accusations and exaggerated damages, but in today's legal environment, it doesn't have to be true to be dangerous. They're not just coming for your business assets, they're coming for you, personally. They're naming you, your spouse, and they're targeting everything you own. And what is their lawyer's very first move, before you've even had a chance to read the complaint or formulate a defense? An emergency injunction, granted by a sympathetic judge, to freeze all of your accounts, all of them. Your business checking, your personal savings, your investment portfolio, everything. And just like that, in the blink of an eye, the wealth you spent a lifetime building is held hostage. Your financial life is paralyzed by a legal system that can be, and often is, turned into a weapon against the successful. Sure, in the quiet of your own mind, you believe you'll win in court. You know the lawsuit is baseless, and you probably will prevail, but that victory is a long, painful, and expensive road away. By the time it's all over, months or even years later, you've been bled dry by hundreds of thousands, maybe millions, in legal fees. Your finances have been frozen and inaccessible, forcing you to borrow money just to live. And your reputation, the good name you worked so hard to build in your community and your industry, has been dragged through the mud, forever tarnished by public accusations. You won the battle, but you may have lost the war. This is a nightmare scenario for anyone who has built something of value. But it's a scenario that old money families, the dynasties that measure wealth in generations, not years, almost never, ever face. It isn't because they're luckier. It isn't because they're above the law. It's because they fundamentally refuse to play such a vulnerable, high-stakes game. They understood generations ago that placing all your assets in one jurisdiction is like building a castle on a seismic fault. They use a legal, sophisticated and centuries-old global financial system to make their wealth structurally, almost philosophically, untouchable. Today we're pulling back the curtain to show you exactly how they do it. Now, before we go any further, it's critical to understand that what we're about to talk about isn't what you see in spy movies or crime thrillers. This isn't about clandestine meetings in shadowy alleyways, stashing illicit cash in a numbered Swiss suitcase, or cooking up convoluted and illegal tax evasion schemes. That's the amateur's game. That is the game of the nouveau riche, who quickly and often publicly become the nouveau broke. The people who try to outsmart the system with illegal tricks are the ones who end up in headlines, in courtrooms, and in jail. This is about something much smarter, much more profound. It's about a fundamental shift in understanding. It's about realizing that there are two completely different financial rulebooks in the world. There's the one that most people, even most wealthy people, play by. In this rulebook, you earn, you save, you invest. You keep your money in local banks and with local brokers, and you hope for the best, all while your assets are dangerously exposed like a ship moored in a harbour with no breakwater to protect it from a coming storm. And then there's the real game, the one played by the global elite and old money families for centuries. The goal of this second game isn't to hide money from the government. Let's be crystal clear on this point, as it is the most important one. This is all completely legal, but it demands absolute and total compliance with your home country's tax laws. For US citizens, that means diligently and annually reporting every single foreign account and entity through regulations like FBAR, Report of Foreign Bank and Financial Accounts, and FATCA, Foreign Account Tax Compliance Act. The penalties for failing to report are severe, and rightly so. The point isn't secrecy from the tax authorities, it's privacy from everyone else, from the public, from predators, from anyone who might see your wealth as an opportunity. The objective is not to evade taxes, but to legally minimize and defer them using the same types of strategies that major corporations use every single day. It's not to hide assets, but to protect them right out in the open by placing them in structures so robust that they become immune to the financial weapons of frivolous lawsuits, aggressive creditors, and unpredictable economic shocks that can wipe out a domestically held fortune overnight. Old money families have not just played this game, they have mastered it, and their weapon of choice, their core strategy, is the meticulous and strategic use of offshore banking and legal structures. They use this global chessboard to build a financial fortress, a fortress that rests on three massive pillars. First, radical financial privacy. Second, incredible, almost absolute asset protection. And third, a machine for creating perpetual, tax-efficient, generational wealth. We're about to give you the blueprint for each one of these pillars. The entire foundation of this financial fortress, the very bedrock upon which everything else is built, is privacy. In our hyper-connected, social media-driven world, privacy feels like a quaint, almost nostalgic, old luxury. We are constantly fed the line, if you have nothing to hide, you have nothing to fear. Old money knows from generations of experience just how dangerously naive that statement is. They understand that when you have significant wealth, a lack of privacy isn't a minor inconvenience. It's a giant flashing neon vulnerability. It paints a target on your back and the backs of your children. Think about it. When your name is publicly attached to every asset you own, your home, your investment properties, your companies, your stock portfolio, you are an open book for anyone with a computer and a grudge. Aggressive lawyers, opportunistic ex-partners, predatory suitors for your children, and even sophisticated criminals can easily look up public records, size up your net worth, and plan their attack. Your financial data is scraped from public filings, sold by data brokers, and analyzed by algorithms, making you a prime target for everything from junk lawsuits hoping for a quick settlement to complex and frighteningly personal scams. This is why the very first move for a wealthy family seeking to preserve its capital is to create distance, to create a legal gap between their family name and their assets. They accomplish this by placing their wealth inside of legal structures not held under their personal names. Think about the simple way a celebrity buys a multi-million-dollar mansion. They never, ever use their famous name on the deed. Doing so would be an open invitation for paparazzi, stalkers, and security threats. Instead, they form a discreetly named Limited Liability Company, or LLC, perhaps called 123 Oak Street Holdings, LLC, and that company becomes the legal owner of the property. The celebrity controls the LLC, but their name is not on the public deed. Offshore planning simply takes this fundamental concept to a global, far more sophisticated level. Instead of a simple domestic LLC, old money uses a powerful, multi-layered combination of international business companies and, most crucially, offshore asset protection trusts. Here's the basic idea, and it's a powerful one. A family, let's call them the Wellingtons, establishes a trust in a jurisdiction known for its powerful privacy and confidentiality laws, like Switzerland or the island of Nevis. That trust, which is a legal entity in its own right, then becomes the legal owner of another entity, like an LLC. It is this LLC that then proceeds to open the bank account or hold title to other assets. The family members, the Wellingtons, are the beneficiaries of this structure. This means they control and benefit from the money, but they do not technically, legally own it. The trust owns it. This is a critical distinction. If you don't legally own the asset, your name is not on it. And if your name is not on the public-facing documents, it becomes incredibly difficult for an adversary to find it, target it, and most importantly, freeze it in a personal lawsuit against you. The lawsuit is against you, not the trust. This isn't about hiding from the law. It's about building a legal wall, a financial firewall between your family's wealth and a world filled with potential threats. Now, it is true that global agreements, like the Common Reporting Standard, or CRS, mean that banks around the world now automatically share information with the tax authorities of the beneficiary's home country. A Swiss bank will tell the IRS that an American is the beneficiary of an account, but the core principle of client confidentiality from the public remains incredibly strong in premier jurisdictions like Switzerland. A Swiss banker is legally bound, under threat of criminal prosecution, not to spill a client's details to a nosy journalist, a bitter ex-spouse's private investigator, or a rival's lawyer on a fishing expedition, unless presented with a serious, valid court order under Swiss law. This isn't a loophole. It's a deliberate feature designed to protect economic privacy as a fundamental right. This privacy creates a quiet zone. It allows a family to manage their global affairs, make investments, and plan for their future without constant solicitation, media attention, or the threat of public exposure. Old money lives by a simple but profound rule that the newly rich often forget in their excitement. True wealth whispers, money shouts. Flashiness and public displays of wealth attract attention, and attention inevitably attracts threats. By legally removing their names from the direct public ownership of their assets, they achieve a level of discretion that is, in itself, one of the most powerful forms of security there is. If privacy is the deep, wide moat dug around the castle, then asset protection is the 20-foot thick, impenetrable stone wall. This is where offshore strategies transition from being merely discreet to being almost legally invincible. This is the pillar that separates the mindset of simply having money from the mindset of preserving wealth. Old money families don't just hope they won't get sued. They arrange their financial affairs so that even if they are sued and lose, the judgment rendered against them is, for all practical purposes, a worthless piece of paper. How is that even possible? How can a valid judgment from a US court be rendered useless? It all comes down to one of the most powerful legal concepts in the world, sovereignty. A court in California or New York is incredibly powerful, but its authority, its jurisdiction, stops abruptly at the US border. A judgment from a US court is not automatically recognized or enforced in another sovereign country. For that to happen, the foreign court has to review the case and agree to recognize and enforce it. And here is the secret, the key to the entire strategy. Certain offshore jurisdictions have built their entire legal and economic systems around not recognizing foreign judgments, especially from the litigious United States. The undisputed world champion in this arena, the jurisdiction that has intentionally and deliberately written the world's strongest, most protective trust laws, is a tiny island nation in the South Pacific, the Cook Islands. When you place your assets into a properly structured Cook Islands trust, you have availed yourself of what is arguably the most formidable asset protection structure on the planet. It is the legal equivalent of putting your gold inside Fort Knox. Let's replay that nightmare lawsuit scenario from the beginning, but this time with our protected family. The angry ex-employee wins a massive $10 million judgment against you personally. Their lawyer is ecstatic, already calculating their 40% contingency fee. Their first step is to seize your assets. They serve papers on your domestic bank and find it holds only a modest operating balance. Disappointed but not deterred, the lawyer hires an investigator to conduct a deep asset search. The search eventually discovers that your real wealth is held in a private bank in Switzerland. The lawyer thinks he's hit the jackpot, but then he looks closer. The multi-million-dollar account isn't in your name. It's owned by an entity called Poseidon Holdings, LLC, registered on the island of Nevis. The lawyer now has to spend more time and money to find out who owns the Nevis LLC. After more digging, he discovers the sole owner, the only member of the LLC, is not a person at all. It is something called the Wellington Family Irrevocable Trust, and its legal home, its jurisdiction, is the Cook Islands. Now the lawyer has a massive, expensive, and likely insurmountable problem. The U.S. court order for $10 million is completely useless in the Cook Islands. It's a foreign piece of paper with no legal standing. To get to the money, the lawyer and his client can't just transfer the judgment. They have to fly to the Cook Islands, hire local lawyers, and relitigate the entire case from scratch in a Cook Islands court, under Cook Islands law. This is where the game is intentionally and legally rigged in your favor. First, lawyers in the Cook Islands are prohibited from working on contingency fees. This means the person suing you, who was previously risking nothing, now has to pay their new attorneys huge hourly fees up front, out of their own pocket, just to get started. This alone stops most predators in their tracks. Second, the statute of limitations to claim that you moved the money into the trust to avoid the lawsuit, a fraudulent transfer or fraudulent conveyance, is incredibly short. In the US, this look-back period can be several years. In the Cook Islands, it's often just 1 or 2 years after the trust was funded. If you intelligently set up your fortress during peacetime, years before any legal threat appeared, their claim is likely dead on arrival. The window has closed. Third, and this is the absolute knockout blow, to prove a fraudulent transfer claim in the Cook Islands, the creditor must prove it beyond a reasonable doubt. This is the same impossibly high legal standard that prosecutors in a US criminal court must meet to convict someone of a capital murder. They have to prove to a near certainty that your sole intent in creating the trust years ago was to defraud that specific creditor who didn't even exist at the time. It is a nearly impossible bar to clear, and it is designed to be. Faced with this legal brick wall, the immense cost, the ticking clock, and the near certainty of failure, the vast majority of opponents and their lawyers simply give up. Pursuing the claim is a fool's errand. While there have been very rare and complex cases of US courts attempting to hold people in contempt to force repatriation of assets, the structure remains the most powerful deterrent known to law. Your wealth stays secure, controlled by your trust, and perfectly insulated from the American legal system. This is what real asset protection is. It's not about hiding. It's about making yourself an impossibly difficult, expensive, and unattractive target. The first two pillars, privacy and protection, are fundamentally about defense. They are about building the moat and the walls of your financial fortress. This third pillar is about what happens inside those protected walls. It's about creating and engineering a system that not only protects existing wealth, but allows it to grow, to be utilized, and to be passed on for generations with stunning efficiency. This is how offshore banking becomes a powerful engine for creating a lasting family legacy. Old money thinks in centuries, not fiscal quarters. Their primary goal is to ensure that their great-grandchildren, people they will never meet, are standing on solid financial ground. This long-term perspective requires legally minimizing the two great destroyers of wealth over time: taxes on growth and investment, income and capital gains taxes, and taxes on death, estate or inheritance taxes. One of the most powerful and elegant tools used inside the fortress is the concept of asset-backed lending. Let's construct a clear example. Let's say your offshore trust holds a $20 million diversified investment portfolio in a private bank in Singapore. You, living in the US, identify a new business venture or a real estate opportunity and need $2 million in capital to get started. The normal, conventional move would be to call your broker and sell $2 million worth of stock. The moment you sell, you immediately trigger a massive capital gains tax bill. At current rates, that could be over $400,000 in federal taxes alone, instantly shrinking your nest egg forever before you've even received the cash. The old money approach is infinitely smarter. Instead of selling a single share, you simply instruct the trustee of your offshore trust to take a $2 million loan from the private bank, using your $20 million portfolio as collateral. A loan is not income, so, when structured properly, it is not a taxable event. You receive your $2 million in cash, tax-free. Meanwhile, your entire $20 million portfolio remains completely untouched, still invested, still growing, and generating returns that can easily outpace and cover the very low interest payments on the loan. You get to use your capital without ever having to sell the golden goose. You have effectively accessed the liquidity of your wealth without triggering the taxes associated with it. The second key to the generational engine is transferring wealth seamlessly through offshore trusts. In the United States, when a wealthy individual passes away, federal estate taxes can claim a staggering 40% or more of everything they own above a certain exemption. This death tax is the single greatest destroyer of family fortunes, often forcing heirs to conduct fire sales of family businesses or properties just to pay the IRS. It is why so many great fortunes vanish in a single generation. An offshore trust completely changes this dynamic. When your assets are held within a properly structured, irrevocable trust, they are no longer legally part of your personal estate. You don't own them, the trust does. So when you pass away from a legal standpoint, nothing really changes hands. There is no large estate to be probated. The trust simply keeps on ticking, following its original instructions, now for the benefit of your children or grandchildren as the new beneficiaries. This structure completely bypasses the messy, expensive, and public probate process. And, with careful and expert planning to ensure full compliance with complex US tax laws regarding gifts and foreign trusts, it can dramatically minimize or even completely eliminate the estate tax liability, because the assets were not technically in your estate to begin with. It is the legal key that makes 100-year-old fortunes possible. Finally, for international families or those with business interests abroad, offshore entities allow for incredibly smart international tax planning. By choosing where a holding company is based and managed, it's possible to legally utilize what are called territorial tax systems. Premier financial hubs like Singapore or Hong Kong, for instance, primarily tax income that is earned inside their borders. So, a company can be established and managed in stable, reputable Singapore, but if its business activities, consulting, licensing, investing, happen outside of Singapore, that income may face little to no local corporate tax. This allows capital to grow and compound at a much more efficient rate within the company, ready to be reinvested globally. Again, and it cannot be stressed enough, it is absolutely essential that all of this is done in full compliance with your home country's tax and reporting laws. The goal isn't to be illegal, it is to be intelligent. It's about using the entire global financial system with its different legal codes and tax systems to your full and legal advantage. Theory is one thing, but let's walk through, step by step, how it all fits together in a real-world scenario. Meet the Archers, a hypothetical American family. The founding couple, in their late 50s, have just sold the family manufacturing business for $50 million after tax. They live in California, a highly litigious state, and their primary goal is not aggressive growth, but the absolute preservation of this capital for themselves, their children, and their grandchildren. After extensive consultation with expert legal and financial advisors who specialize in this world, they decide to build their fortress. Step 1. The foundation. The Cook Islands Trust. Their first action is to establish an irrevocable asset protection trust in the Cook Islands. The trust document is a detailed legal instrument that names them and their children as the beneficiaries. They hire a highly respected, licensed and bonded professional trust company in the Cook Islands to act as the trustee. This trustee has a strict legal or fiduciary duty to manage the trust for the benefit of the Archers, according to the terms laid out in the trust deed. With this single move, the Archers have erected the main fortress wall. Their wealth is now legally domiciled and shielded by the world's most protective trust laws. The $50 million is no longer legally theirs. Step 2. The operational layer, the Nevis LLC. Next, the Cook Islands Trust, as a legal entity, forms a limited liability company, LLC, on the Caribbean island of Nevis. Nevis is another jurisdiction famous for its corporate privacy and strong LLC statutes. The Cook Islands Trust is the only member or owner of the Nevis LLC. The Archers then appoint themselves as the managers of this LLC. This is a crucial step. It gives them legal authority to make the day-to-day investment decisions and manage the assets, while the ownership remains with the impenetrable trust. Step 3. The depository, the Swiss bank account. The Nevis LLC, managed by the Archers, then proceeds to open a multi-currency investment account at a prestigious private bank in Zurich, Switzerland. Switzerland is chosen for its centuries-long history of political and economic stability, the strength of the Swiss franc, and its world-class banking sophistication and tradition of client confidentiality from the public. The $50 million is then wired from the sale of their business into this new Swiss account. The account name on the statement reads Nevis Global Investments, LLC. Now, take a step back and look at the brilliant, multi-layered defense structure they've built. The Archer family name is nowhere to be found on the assets themselves. A plaintiff's lawyer searching for Archer assets in the US or even globally will come up empty-handed. The money is sitting safely in a secure Swiss bank, but it is legally owned by a private Nevis LLC, which in turn is legally owned by a nearly untouchable Cook Islands Trust. Step 4. The strategy in motion. The fortress is now built and running. The Archers, acting as managers of their Nevis LLC, direct the Swiss bank to invest the $50 million in a conservative, globally diversified portfolio of stocks and bonds. The portfolio is managed professionally and grows steadily. A few years later, the Archers decide they want to buy a $3 million vacation home in the mountains. They do not call their broker, sell assets, and trigger a huge tax bill. They simply instruct their trustee to have the Nevis LLC take out a low-interest $3 million loan from the Swiss bank, collateralized by a small portion of their portfolio. They receive the cash in their US account, effectively tax-free, and buy the home under the name of another domestic LLC for privacy. Meanwhile, their main investment portfolio, which has now grown to, say, $60 million, keeps appreciating, completely untouched by the transaction. Years later, when the Archer parents eventually pass away, the fortress performs its final, most important job. There is no public probate battle over their fortune. The trust, which is designed to live forever, simply continues on, uninterrupted. The trustee, following the instructions left in the trust deed, now manages the assets for the benefit of the Archer children. The family wealth is preserved, protected from creditors, and passed seamlessly across the generational line. The fortress did its job perfectly, As you can now see, the sophisticated way that old money families use offshore banking has absolutely nothing to do with the cartoonish Hollywood images of crime, secrecy, and tax evasion. In fact, it is the polar opposite of a reckless gamble. It is a calculated, conservative, and deeply intelligent strategy designed to methodically stamp out risk, reduce vulnerability, and allow you to take control of your own financial destiny in an uncertain world. It is about building that financial fortress on three unshakable pillars. First, privacy, which acts as an invisibility cloak, shielding you from becoming a target in the first place. Second, asset protection, which serves as an impenetrable shield, making your wealth a fortress against legal and financial threats. And third, generational perpetuity, which functions as a wealth engine, allowing you to grow your capital efficiently and pass it on seamlessly to future generations. The wealthiest and most resilient families in the world don't have a different set of laws that apply only to them. They just have a much deeper and more sophisticated understanding of the global rulebook. They know how to legally and ethically combine the legal systems, the trust laws, and the banking services of different sovereign countries to build a financial reality for themselves that is safer, more private, and more efficient than anything you can possibly find by staying in one single jurisdiction. They aren't breaking the rules of the game. They're using all of the rules to their maximum advantage. This knowledge was once a closely guarded secret of the European aristocracy and the global elite, passed down from one generation to the next. But in our connected world, it's no longer a secret. It's a strategy. It's a set of tools available to anyone with the wisdom to seek them out. And now you've seen behind the curtain. If you found this deep dive into the real strategies of the ultra-wealthy valuable, and if you want to learn more about how to play the financial game at the highest level, make sure you subscribe and turn on notifications. We'll be back with more of the strategies that the 1% use to build, protect, and perpetuate their wealth.